Unfortunately, litigation is never far away from us in our day-to-day jobs as lawyers, and our main concern is often how we're going to fund it. Our commercial litigation partner, James Gordon, explores some of the options. So James, I understand the litigation funding rules changed last year. Can clients still do no win, no fee?
Yes, they can. The rules changed in April of 2013, and it is still possible to do no win, no fee or conditional fee agreements. But what has changed is it's no longer possible to pass the success fee onto the losing party. So we've done quite a number of either full CFAs, 100% no win, no fee, and also we've done some partial ones where clients will charge clients, say, 50% of fees as we go, but we'll put 50% of our fees at risk. Now, what's changed is it used to be the case that if we won, we would recover our normal basic fee plus our success fee off the losing party, and that's what's changed. And that means that CFAs are now a lot less attractive than they used to be. And that rule also applies to after-the-event insurance products. So it used to be the case that if you did a CFA, that would be we, the lawyers, sharing the risk with the client and saying, do you know what, we'll back our judgment. If we win this case, then great, we can get a double fee off the losing party, but if we don't win, we won't get paid. That didn't deal with the downside risk in case we lost, where the client would be liable for the other side's fees. So a market developed, the after-the-event insurance market, whereby you could get a premium which was recoverable from the losing party, and that meant that you could actually insure for the risk of covering off the other side's costs should the worst happen and should we lose. Now, both of those things have changed. It's no longer possible to recover the success fee or the premium from the other side. You still can do no-win, no-fee agreements. You still can get after-the-event insurance. But the problem is now that the success fee and the premium have to come out of your own winnings. So if you win the case, you're going to have substantially less than you would have done previously.
And what is the latest position on contingency fees then?
When the government changed the rules in April last year, they saw that actually by taking away this recoverability on success fees and premiums on ATE insurance, it meant that actually claimants were going to have restricted options. So what they did is they changed the law so that for the first time in the UK we could do contingency fees, which of course have been in the States for a long time. You know, you've got a claim for 10 million and I as your lawyer will agree that I get 30% of those damages if I win. Very typical in the US. The problem came when the Ministry of Justice came to draft it, because they did two things, which means that most law firms are not taking on what are called damages-based agreements, or as one lawyer has called them, don't bother agreements. Because, number one, it's not possible for the lawyers to do a partial DBA, a partial contingency fee. So I can't charge a client 50% of our fees on a normal basis and have 50% at risk. It has to be all or nothing. But the bigger problem is that the way the rules have been drafted, it means that the law firm could be liable for the other side's fees should we lose. Now, that wasn't the intention of the drafting, and at one point the Ministry of Justice did say that they were going to change the drafting, but they've now confirmed that they're not. So where does that leave contingency fees? There are very, very few law firms doing contingency fees at all. And so as a funding option, I have to say that's not really available. So actually what's happened is the government has taken some funding options off the table and hasn't actually put one back on.
We've heard a lot in the market about third-party funding of litigation. Is that still viable?
Well, partly as a consequence of the fact that law firms aren't taking on contingency fees, clients have got to look to some other alternative. Now, third-party funders have been coming into the UK litigation scene for about 10 to 15 years, but particularly since the law changed last year, you've got a lot of funders entering into the market. Now, the problem with the funders is they're not regulated, and you need to be very, very careful. There are some horror stories, some high-profile horror stories. For example, the Clifford Chance case, the Excalibur case, whereby there were 3 funders funding a piece of litigation. the fees run up to 20 million, they lost, and one of the funders collapsed. And so the solvency of your funder is a big issue. There have also been some cases, again quite high profile, whereby third-party funders are saying to clients, do you know what, we may have lost, you may be looking to me to pick up the tab, but you didn't tell me the full story, client, and so I'm not going to pay out. So there are some real issues around the identity of your funder, the solvency of your funder, and are they actually going to pay out at the end of the day? There is in the UK the Association of Litigation Funders, whereby 8 of the UK funders have imposed a self-imposed code of conduct. But even then they're only talking about a capital requirement of 2 million. So it really isn't that substantial. So third-party funding is an option. It tends to be for bigger cases, so a lot of the funders will only look at a case worth 3 million damages plus. And the reason for that is the funders are looking for quite a significant return, 2 or 3 times their investment, in order to fund a case. Well, you need a fairly big pot of damages for the economics of that to make sense.
So, if you are a general counsel, what are your litigation funding options?
We are sadly back to the old hourly rate. So most of the litigation that's been conducted in commercial law firms these days is being conducted on an hourly rate basis. It's not all bad though. There are some modifications and changes over recent years. First of all, cost estimating. So the courts have required, and frankly commercial practice has demanded, that litigation lawyers get much better at cost estimating. What that means is that for certain tranches of litigation, it's possible now to fix fees. So if I'm doing a case, Michael, and I know you've got a cupboard full of documents, I won't charge you on an hourly rate basis for that. I can charge you a fixed fee for the disclosure part of that. If I know you've got 3 witnesses in a case, you can say to me, James, you've got experience of this, you've been doing cost estimating for years now, can't you give me a fixed fee for that? Now, that requires open transparency and honesty with the client, because what often happens is the client says, I've got a cupboard full of documents, and it turns out that actually they've got 3 servers as well, which are full of documents, and that's quite hard to fix fees. But if you get the scoping right, it's possible to do it. The other thing that the courts are doing is they are more and more capping costs. So costs capping is coming into play in the UK. In fact, from April of 2014, it's going to apply in all courts in the UK, save for claims over £10 million. So the judges are taking a much more interventionist approach to litigation costs. So most of the work that we're doing is back to hourly rates. We are doing some fixed fees. We are seeing some cases if genuinely clients either can't afford it, or alternatively, they just don't want the cash flow of a large piece of litigation, then there are some funding options which include either a conditional fee agreement whereby the client will wear the success fee out of their damages. Equally, you can still get that after the event insurance premium, but you'll have to wear the premium. And if you just don't want that, the third-party funding is an available option. But most litigation we're seeing is back to the good old hourly rate. So whereas before April of last year, Rag & Co, we had at any one time 5 or 6 cases on no win, no fee with after the event insurance premiums. We don't have any of those at the moment. We've got 1 or 2 old run-off cases, but no new cases are being taken on. So it really is back to what's the hourly rate, give me a sensible estimate that you're going to stick to, and if possible, fix fees for me along the way for each stage.
Thank you, James.